go. Give me a second. Display. All right, almost ready, almost ready. Just getting ready to go. The Vincente, good evening, good evening. All right, so that's working. That's going. This goes over there like so. And then this, oops, goes over here like so. Cool beans. Now we're just about ready to roll. Uh-oh. Need a pair of glasses. Hold tight. Gonna get the glasses. I'll be right back. Oh, raw E. Here we go, here we go, here we go, yo. Here we go, yo. All right, all right, all right, all right. Well, person in the backyard. Oh, cool. All right, so, good evening, everyone. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, take you along for the journey for a simple, safe, predictable, consistent 1% per week. Let's get started. I'm gonna go right to looking at some stocks, because basically what I'm looking for specifically, I'm looking for companies that are consistently profitable, that share their dividends. Okay, a dividend is nothing more than the profit in which the company shares with its shareholders. Okay, the investors, that's you and me. When you buy a stock, you own a portion of that company. That company, well, if it has dividends and they increase consistently, well, it's a profitable company. It's plain and simple. So I like companies that have at least 2 decades of consistent profits. 2 decades, that's 20 years. Now, the stock market has been around for over 400 years. There are companies here in the U.S. that have been in business for over 200 years and been trading shares, stocks, for over 200 years. Well, it boggles my mind why people buy what they buy sometimes. And it's amazing, really. Seriously, it is. Because as the night progresses, okay, you will see anywhere between 4 and 20,000 people come through these 7 channels. And I'm streaming on 7 channels. Okay, so I got 1, 2, 3, 4, 5, 6, 7. 7 channels, which means I'm getting people from all over the place. And they all ask me questions. And they all want me to take a look at stock that they think is wonderful. There's absolutely nothing wrong with whatever you think is wonderful. Now, I have a very strict trading policy. If the company's not profitable, I don't want to take a look at it. Now, I'm not talking 1, 2, 3, 4, 5 years of profitability. I'm talking 2 decades. That means every single year, year after year after year after year after year after year, consistent profitability. That is basically what I'm looking for. Then I want to do a trade against them that is safe and predictable. Well, the only trade that I know of is covered call. It's simple, it's safe, it's predictable. It helps me obtain my goal of 1% every single week. Now, 1% a week may not sound exciting to you guys, but I'm retired. I don't have the luxury of being wrong, which means I can't just buy anything without a good reason behind it. Now, I'm not looking for capital appreciation. That means I'm not looking to buy a stock and have it shoot to the moon. Nope, I want consistency. I want preservation of my capital. Those are my 2, profitability, consistency, and preservation of my capital. Okay, I'm 61, I'm retired, I don't qualify for, what do you call that stuff? Social Security. I don't qualify for that. I was my own boss. I owned my own manufacturing company. That means I don't have a pension. I sold my company back in 2003, spent a shit ton of money. Then now I'm back at building my empire again, so to speak, and I'm looking for 1% every week to help me pay off my bills. Let's go back to some questions here. Breakdown, good evening. Hello from India, good evening to you. What's up, Hugh? If you yapping, I have no idea what that means. They're called dividend aristocrats. Well, some of them are aristocrats. Monkey, all right, monkey see, monkey do, cool beans. All right, Battle of Pelennor Fields project wants to take a look at UPS. All right, we'll take a look at UPS. We looked at it last night. Look at this guy. Hey, Toast fan, good evening. I went all in on MSTR. Iman, I feel bad for you. I don't like MSTR, but hey, if it works for you, I hope you're the best on it. We'll take a look at it, MSTR, and I'll give you my feedback on what I think about it. Made almost 10,000 today trading Soundhound. Yeah, good luck with that one. You like silver or gold? No, I do not. Now, the reason I do not like silver and gold is because there's no way to get cash flow from gold or silver. It just sits there and collects dust. That's all it does. So some people like it, some people don't. Okay, I'm one of those that I don't really care for it one way or the other. It's a preservation of wealth. Preservation of wealth, not cash flow. Okay, so if I had $100,000, it would slowly increase in value over the years. However, I would not get weekly cash flow from it. So I would have to buy it, and then I have to buy it on a Monday and sell it on a Friday in order to get weekly cash flow from gold, and it's not that predictable. So no, gold, silver, no thank you. Yep, me no other press. Blah, blah, blah. Alrighty then. Thank you for that feedback. Gotta love it. All right, so that being said, let's jump in. Let's start off with where we left off last night. Now, we had a whole bunch of stocks you guys wanted to take a look at last night, so we're going to look at some of them now and go from there. We left off at Humana. Okay, Humana. All right, so let's do this. All right, let's see who we have on TikTok tonight. Vincent Gracers, good evening. Emma Lagos, good evening. Miguel, Scott Miller, cool. Dwayne, Dawn. How you doing, Dawn? Kobe, good evening. Nina, Marvin. Real Handy, good evening. Timur, all right. Stuart, L. Terry, Randy, what's going on? Deport President. All righty. Boss Mom Forever. Good luck with that one. Tony, Key Mellon. King 24. Gerald, good evening. Chris, good evening. Madisha, good evening. Ken the Junk Bum. All right, Ken. Floyd, good evening. Joseph. David. David E. Good evening, David E. Money, what's happening? Arav, good evening. Zelair. All right. Malone, Andrew, David, Starry Studio, Tim Bex, David, Sherry. Good evening, Miss Sherry. Leo, George. Good evening, Brent, Jasmine, Gowl, Nell. All right. Anthony, Tim Bex. Good evening, Maverick, Terry Berry, Be True. JHLN. Helen. Oh, Helen. Interesting way of spelling that. Chris. Marvin. Kaya. DTC Queen. What is DTC? Oh, okay, whatever. Hassan. Hi, what's up? Thoughts on Bitcoin next 10 years? Hey, I'm interested to see when Bitcoin's actually having options available, because Bitcoin in and of itself, you cannot get weekly cash flow from it unless you sit in front of your computer. Because nobody has shown me buy it on Monday, sell it on Friday, and you're going to make a certain percentage. Nope, nobody's ever shown me that. Shad, good evening. We looked at UPS. Yep, we're going to look at UPS again. Hen, good evening. Eggy Thomas, good evening. Barsdowski. KB, good evening. David, good evening. David. Okay. I almost caught up. Chris, good evening. Dawson. Hello. Cadillac. Oh, Shadillac. Okay. Della. Oh, Dina Linden. Good evening. All right, so please help me make better decisions than going all in on MSTR. I'm willing to learn. Hey, Aman, we're going to take a look at MSTR in a little bit, and I'll tell you what I think of it. But I have a certain strategy that I use, and I might be in a different segment in my life. Okay, see, I'm retired, which means everything I have to do has to have some type of income coming in on it. Okay, so I'm not quite sure what it is you're looking for on MSTR. Mike, good evening. Check that out. I don't know who sent that. It's just too quick. Yo! Intibel, good evening. All right, so Dave. Oh, David Davis Dave. Benny, good evening. All right, Willie. All right, all that being said, let's stop all the questions and just jump on in. Should you buy them when they're down? Absolutely. Hi, y'all. Hey, good evening. All right, so said hi to everybody. All right, let's get rolling. First stock we're going to look at tonight is going to be Humana. Now, HUM. Now, if you don't understand what I'm doing, let me briefly explain. All right, I do what is called covered calls on qualified dividend stocks. Okay, now qualified dividend stocks, what I'm looking for is companies that are consistently profitable. Let me give you a quick rundown on who they are, in case you don't know. Now, if you have a pencil, paper, some things you might want to write down, which, it's really irrelevant because I say the same things day after day after day after day. Hopefully, this is a starting point for your investing journey if you're looking for a safe, predictable, consistent stream of income. Safety being the main key. Okay, because when I say I'm 61, I have no desire to go back to work. Now, that doesn't give you an excuse for not going to work. Okay, I've been working since 1973. I put in more than 40 years of work. So, pay your dues, contribute to society in some way or form, some shape or form, and then when you get to a certain point, then retire. After you've made a positive commitment, contribution to society. Okay? Okay, we live here. We all got to live together. It would be nice if everybody does something. Something. It doesn't matter what you do, as long as you do something. Sweep floors, flip burgers, be an executive, build houses, build roads, do plumbing, HR, whatever it is you're good at. Contribute to your fellow man, contribute to society in some way, shape, or form. Okay, now I've had plenty of work. I've worn plenty of hats. Enough of that crap. Let's just get in and take a look at what we're doing. You're not here to listen to me. I'm sure you want to see what stocks look good. What does this trading strategy look like? How safe is it really? And how did it come about? There's a lot of unanswered questions. Ask whatever questions you want. But remember, the stocks that I am looking at specifically, I have only 2 criteria. Only 2. And you'll be amazed at how many people ignore the 2 criteria that I'm asking for. 2. Number 1 is 20 years of consistent profitability. That one boggles my mind right there. Why some of you guys have me look at stocks that are like 4 or 5 years old. And I'm thinking to myself, didn't I say 20 years? Okay? 2 decades of consistent profitability. And weekly options only. Okay, there's over 10,000. Now I look every single week to see how many different stocks have they added to the stock market. Well, this week, it's 10,046 different companies that we can invest in. Well, that's a lot. How do you decide which ones are right for you? Well, for me, I want consistent profitability and weekly options. That's it. That's the only 2 criteria I want. Now, believe it or not, out of that 10,046 companies, only about 300 have consistent profitability and weekly options. And I put them into a calendar and I rotate them. Okay, you're going to see as the night progresses, I'll invest in certain stocks, and I'll do it over and over and over again. Now, I've been doing it for quite a while, only because, hold on, I switched over to a different tea. I don't think it's working the same as the original tea I had last year. Anyway, as I was saying, I don't have the luxury of being wrong. I don't have the luxury of making mistakes. I don't have the luxury of taking a big fat chunk of money, sitting it aside and waiting and waiting for it to go higher and higher and higher. No, no, no. It has to be proactive. Every single position that I have, I create a weekly cash flow from each and every single position. Other than that, it doesn't make sense for me. Okay? Now, if I took the regular avenue, you make a couple $1,000,000, you give it to a money manager and they give you a 4% draw, great, I'd still be working. Yeah, no thank you. Okay, you got two choices. When you retire, you have two choices and only two choices. And don't let anyone kid you, or don't let anyone lie to you thinking that you have more than two choices. You don't, you have two, that's it. Either learn how to invest and take care of your own money, or just say, I don't care, give it to someone else to do it for you. Because we're the only species on the planet that's got to pay to live here. No matter how you decide what kind of lifestyle you want to live, you have to pay something. Every single week, every single month. No matter how much money you have, no matter what you do, you still have to pay to live on this planet. Okay? And when you're 65 or whenever you retire, I retired at 59, but other people retire younger than me, some people retire older than me, some people still working even after 50, 60, 70 years. My older sisters are still working. Anyway, listen. Anytime I look at a stock, I want to look at the 1-year chart. Okay? A year ago to today. One whole year all at once. And I'm looking for 5 things. Now, you can see these 5 things that I'm looking for within 3 to 4 seconds. 3 to 4 seconds. Are you ready? High, low, where was it, where is it, and what direction? Up, down, sideways. Simple, right? 3 to 4 seconds. High, low, up, down, sideways. Okay? Now, what I'm looking for next? Well, what's the current price at this moment in time? Current price is $226.61. Now, if you know anything about a covered call, well, covered means it's a safe trade because you're covered. It's right in the title. You are covered. Okay, don't worry, you're covered. I got you. You're covered. They say that in insurance policies all the time. Hey, don't worry, you're covered. Well, a call option or a put option is an insurance policy. It was originally intended back in the 70s to protect those rich people from losing money. So let's say you owned Humana and you thought for whatever reason, you thought the stock was going to go down. So you bought you bought an insurance policy called a put option. So if your stock went down, see this? If your stock went down, the value of the option increased. So you didn't lose any money. Well, that was the insurance policy. Okay, the same with the calls, same with the puts. There's a lot of different ways to use them, but they are insurance policies to help the rich people not lose any money. Now, we got a couple of people say, wait a second, if I do this, this, and that, well, I can get this. Yeah, they take and they twist it so that you can write an insurance policy every single week. It's called a call option or put option to be able to generate income. So I'm going to show you exactly how that is done. It is called a covered call. There are literally hundreds of videos online to explain what a covered call is, how it works, what the risks are, blah, 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 all the kind of nice, neat, fun stuff. So, Greg, Tesla, cold day in hell, brother. I don't like Tesla. Sorry. Tesla does not have dividends. And it surprises me, Greg. Okay? The name of the show is Dividend Stock Talk. Dividend investing for weekly cash flow. So I'm kind of curious, TSLA doesn't have dividends. So why are you suggesting me to take a look at it? Just curious. All right, let's keep on moving on. So here's Humana. First thing I'm looking at, high, low, where was it, where is it, what direction is it going, blah, 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 all that kind of nice, neat, fun stuff. Now, what is it going for? 226. Now, a covered call allows me to sell to someone else the same price I paid for it and collect the insurance premium. Check this out. The current stock's 226. The closest strike price is going to be the 227. And it's going for $5.20 a share. Now, when I say I'm looking for a 1% every single week, well, what I'm doing is I'm buying a good quality stock. I'm selling it to someone else for basically the same price I just paid for it. So if I'm paying $226 tomorrow morning, I sell somebody the rights to buy it from me at $227.50. I can pick up $5.20 per share premium. Okay, you know you have homeowners insurance. You got to pay your insurance premiums every year. You get car insurance. You got to pay your insurance premiums every year. You get health insurance. You got to pay your premiums every single month, or however you want to do it, whatever. So with your portfolio, your money, well, you could get cash flow every single week from the money that you have. Now, all of my money is in my trading account. Another reason that is because my trading account, they gave me a credit card and they gave me a debit card to go along with it. And any money that I am not using collects a nice, decent return. So I like the liquidity. Now, let me explain liquidity. Because if I wanted to buy something, okay, if I saw something nice I wanted to buy, well, I'd either go to the bank or I'd write a check or use my credit card, blah, blah, blah. But all my money's in the stock market. I just pick up my phone, click, click, click. I sell something, transfer it over to my card, and then I buy something. Other than that, it is working every single week. Most of my money, so last year, 95% of all my money was working every single week. Well, this year, with that Trump derangement syndrome going around and people panicking every time the old boy opens his mouth and selling off stuff and anyway. So I got to leave a little bit more margin. So nowadays it's only like 70% of all my money's invested, and I got to leave that 30% cushion just in case people panic again because old Donnie Boy says something and people panic and say, "Oh, the world's going to end. Let me sell my stuff," and everything drops. Yeah, I got a margin call during that. What did they call that? Tariff scare. Okay, the tariff scare. The old boy says, "Hey, we're going to have tariffs." So everybody panics, sell out like crap, and everything drops. Yeah, I got a margin call because of that. Thank you. Okay, there's a margin call. Did you not go to work? Did the boss say, "Hey, you don't need to go to work today. We got a margin call"? Not a margin, tariff. Okay, we got to deal with these tariffs. Everybody take a couple weeks off. Now, it doesn't work that way. We keep going to work every single day. We keep the American economy moving. Why people panic is beyond me. Hey, Hollywood's in the house. Hollywood, we're looking at Humana, H-U-M. So, everything looks good. Let's take a deeper dive into the stock itself. Let's stop this jibber-jabbering and just take a look at some good quality companies and see if any of this makes sense to you. So, Humana, a year ago, it's at $3.49. The high of the year was back in the middle of July, and that's $4.08. Well, from there, a couple of months later, the beginning of October is the bottom of the year. Okay, the high of the year, a couple of months later, there's the bottom of the year. Well, look what happened next. It's just kind of like going sideways. Just staying in that little channel right there between 240 and 300. All right, well, let's keep on progressing. Now, the second chart I want to look at is the 90-day chart. So I want to look at the 1-year chart, the 90-day chart, and then the 30-day chart. Because I want to get down and find out where I think the stock is going next. So as I progress, everything will unfold and things will start making more sense. So the last 90 days would be February 27th. Right there it is. Okay, so here's the last 90 days. The high, the low, where was it, where is it? Look at this. Sideways, up, down, up, down. Well, it doesn't look very good here. Look at this. Here's the top, here's the bottom. She shot up, she pulled back. She's coming down at the moment, so it doesn't look like a good idea this week. But I do like Humana, so I'm going to write it down for next week, because eventually this is going to find a bottom and then turn around. So I want to be prepared when that happens. So Humana, I will look at it every single week. Well, every day this week. Now, it only takes me a couple of seconds. You open it up. What did it do today? Was it higher or lower? Great. Fine. Look at it tomorrow. Okay, so I'm going to write Humana down for next week. Honeywell. H-U-M. I got to watch out for Honeywell and Humana because they look similar. All right, so next on the list, John Deere. Oh my, John Deere, lovely company. Here we go, John Deere. I'm going to say no. Wasn't that quick? Remember, 3 to 4 seconds to find out everything you need about a company. Well, to start out with, okay, where's the high of the year? Where's the low of the year? Where was it a year ago? Where is it now? What direction is it flowing? Where is the river flowing at this moment? If you think it looks like a river, okay? Up, down, up, down, up, down. Look at this. Up. Now it's pulling back right there. A little too high. If you look at the bottom here, okay, 8-9 months ago, look where we are now. Look at all this profit from last year's bottom right there. That's way too much. I'm going to say no to John Deere and move on to the next one. Wish they let you finish explaining. All right, Winnie. Thank you for that. All right, so no for John Deere. Ford. Ooh, now we've been following Ford for quite a while. I remember Ford went up. Look at, so the closest strike price is going to be $10.50. Now, I don't want to look at the option for this week because there's only 3 days left. Okay, Wednesday, Thursday, Friday. So what kind of profit can we get out of that? Not a whole heck of a lot. So let's go take a look at next week. So we're going to close out the 30th of May, which is this week. And next week, here we go. What's the 1050 look like for next week? Well, that's $12. Sorry, $12 per contract, or 12 cents per share. Okay, so 12 is more than 1%. Well, then let's see what happens. A year ago, we're at 12. The high of the year, $14.85, and the bottom of the year, $8.47. Now, I remember in high school, I had $8.47 in my pocket. I could buy a share of Ford, but I'm sure back in the 80s it was probably less. All right, so the last 90 days. Okay, same thing. High, low, was, is. Look at the direction. Up, down. Up, down. What's going on here? Okay, we saw this run up from the bottom here. Nice run up. And then she pulled back. 1, 2, 3, 4 days. Now she's turning around. Is she turning around? Well, let's get a little closer look. All right, here's the closer look. Here's the last 30 days. 30 days ago, we're here. Here's the bottom. Here's the top. Now she's pulling back. Okay, today we have a lower low than yesterday. So she's still coming down, not quite ready to turn around again. So when she finds the bottom, turn around, go back up, and then we'll take a look at it. But not this week. Hey, somebody wants to take a look at Coke. C-O-K-E. What the heck is C-O-K-E? C-O-K-E. No options. That's a no. Coca-Cola. Alrighty. Now, interesting. Okay, I like to look at 5 things. Are you ready? Let's get rid of this. High, low. Where was it? Where is it? Look at the motion. Up, down. Up, down. What's going on right here? To find that out, we got to zoom in a little bit closer. But before I do that, what do the numbers look like? Okay, the chart's here. The numbers are over here. Okay, the current price, $71.78. The closest strike price, $72. It's going for 76 cents. Now, I do have to admit, Coca-Cola, I very rarely buy it unless the numbers work. Well, they're working today. Okay, for next week. If I'm buying it at $71.92, I sell it to someone else at $72. Okay, I make it 10 cents there. Not a huge amount, but that's not what we're going for. we're going for this right here, the 76 cents per share. Now 76 cents per share is over 1%. That's what I'm looking for. I listened to Rand Howell. I have no idea who Rand Howell is. Okay, Edwin, sorry about that. Rand Howell is a smart man. Okay, if you're listening to him, I'd like to think that he's a smart man. So, let's keep on progressing. Okay, a year ago, Coca-Cola is at 61.93. She shoots up to 73 in August. Okay, drops all the way down to the bottom of the year at 60.61 in the beginning of January. Now from there, she shoots up to the high of the year, 74.38, and that was towards the end of April, which was just a couple of weeks ago. All right, well, the last 90 days. Okay, look at your last 90 days. Down, up, down, up, down, up. What's going on here? Okay, she's definitely going to the upside, but by how much? How long? And did we miss it, or is it still available to us? Well, let's take a closer look. The last 30 days would be right there. Okay, here's our high. Here's our low. That was 2 weeks ago. She jumps up. Now we're going sideways. Okay, does it make sense? So here's the big question. Does it make sense? That's number one. Number two is, do you like Coca-Cola? Well, you should. Okay, now I'm not telling you to buy it. I'm just saying you should like it. The company's over 100 years old. They've been making Coca-Cola long before I was born, and more than likely they're going to be making Coca-Cola after I'm gone. I mean, think about it. It kind of makes sense. Do you really think that they're going to stop making Coca-Cola anytime soon? No. They've made Coca-Cola a long time. All right, anyway. So, do you like it? Are you willing to buy it and hold on to it for a long period of time? Because you just might have to. Okay, currently it's at 71.78. Okay, if I buy it and sell it to someone else at 72, I can pick up 76 cents a share. And do I care if the stock goes up? No, I don't. Because I want the insurance payment. I don't care if the stock moves. It can stay exactly where it is. I will still make my money. If she goes up, I will still make my money. If she goes down, I will make my money and I will keep the stock. Okay, granted, it'll be less than what I paid for it, but that's not what I'm buying it for. I'm buying it for the cash flow that it brings me. Now, the way I'm looking at it and the way I've been describing it lately, and it seems to make a little bit more sense, is you're not buying a stock. You're buying a cash-producing asset. So, let's say hypothetically, you buy 100 shares of of Coca-Cola. Well, that 100 shares equals to one option contract that you can sell every single week, regardless of what the stock is doing. Okay, right now it's at 71.78. Great. Well, if I buy it tomorrow morning, 71.78, this week I can sell the 72s. And the 72 is going for 76 cents. That's 1%. Well, let's say hypothetically speaking, next week I do the same thing. And I roll it forward and pick up another 1% next week. And then next week after that, I do the exact same thing. So 1% this week, 1% next week, 1% the week after that. And I just keep on doing it week after week after week. Why would I ever sell something that's giving me constant cash flow? Now, I can't go out and buy the Coca-Cola company, but I can make a mini Coca-Cola factory. Play with me, if you will. So if I buy 100 shares, great. I own one contract that I can sell every single week. 5 contract of 500 shares, that gives me 5. Well, that would give me weekly cash flow also. So although it's kind of like playing Monopoly. You know when you play Monopoly, you go around, you buy one greenhouse, okay? Keep going around, you buy another greenhouse. It takes 4 greenhouses to get one red hotel. And as you accumulate, okay, every single house you add, you get to have more money and rent every time somebody lands on it. Well, every week I get to rent that out. Every week I get to collect a premium from it. And then when I can, I will buy another 100 shares. So now I have 2. Okay, maybe another month, I'll buy another 100. Now I'll have 3. And then it just starts to snowball. So as you progress over and over and over again, your asset, whatever it is. So if you buy 100 shares this week, 100 shares next week, now you have 2. Now you buy another 100 shares, now you have 3. You buy another 100 shares, now you have 4. And you can do this over and over and over again. Okay, it's not like you're buying stock, you're buying a cash-producing asset. Is it a good cash-producing asset? Well, this one's been around for over 100 years. Okay, they consistently been profitable for over 5 decades. They are what is called a dividend king. Consistency and profitability. That's what I'm looking for. Coca-Cola is on the top of my list. Now, I'm not saying it should be on the top of your list, but why isn't it? Think about it. They're over 100 years old, and they're still going strong. You can buy Coca-Cola in almost every single continent on the planet. Almost. Okay. Anyway, let's keep on moving. So I like Coca-Cola. Let's actually do a practice run, and I'll show you how it works. So I like Coca-Cola. We're going to do the 72s. All right, so see if it makes sense. Now, I'm going to be doing a bunch of these as the night progresses. You know, this one, we'll do another one as they see fit. Now, this one looks good, so we're going to actually do this one. First and foremost, I like 72. Let's get rid of this because we don't need it anymore. We're going to change this right here from single. We're going to bring it down and do the covered call or covered stock. I mean, hey, don't worry, you're covered. Call up your Allstate deal. Hey, Allstate. Yeah, I got an accident. Hey, don't worry, you're covered. Okay, same thing. It is an insurance policy that allows you to sell something at a future price at a future date. And for that, somebody pays you a premium. Now, the premium I'm looking to collect, 1% or more. Stock price is $71.84. For 72, well, it's paying more than 1%, so I'm going to take it. So let's take a look. All right, covered stock, there we go. The 72, right, here's the strike prices, okay? 68, 69, 70, 71, 72. I can sell any one of these I want. Which one makes the most sense? It's all going to be a math problem, okay? The higher up you go, the less rate of return you're going to get. The further down you go, the higher rate of return you're going to get, but there's a balancing act. The balancing act, the highest and safest rate of return is right at the money, which is the 72. So let's take a look at the 72, right there. Now, I have mine preset for buying 1,000 shares, but I'm going to bring it down to just one contract. So one contract is easy to understand. So if one contract will cost $100, 2 contracts will be $200. 3 contracts will be $300, so on and so forth. We're going to go over that right now. However, this is $72 per share. And this is what it's going to look like. Are you ready? Here's Johnny. Oh, where did it go? Here's Johnny. Here we go. Buy one covered call of Coca-Cola, KO. 100, which is the weeklies. It tells you right there. Now, I always tell people, read the green line. This is the order. Read it slow, break it down 1 or 2 words at a time so that it makes sense, because it's a lot of information jam-packed into one sentence. Let me read it to you in both different ways. You ready? Buy one covered call, Coca-Cola 100, weekly 6 June 25, 72, call KO, market at to open. Well, that's confusing as hell. So let's break it down slowly. Okay? Buy one covered call against Coca-Cola. 100 is the weeklies. 6 June 25. That's next Friday. Okay? Go slow. Don't be in a hurry. The $72 call option against the Coca-Cola stock at the market to open. Say it slowly. Go. Don't be in a hurry. Most beginners are going to make mistakes by reading it wrong, hitting the wrong button, or using, the wrong terminology. All right, so let's break it down a little bit. Maximum profit, $100. Do you remember when I say I'm looking for a trading strategy that's simple? Well, a covered call is very simple. It's one of the easiest strategies there is. Safe, it's one of the safe. It is so safe the federal government actually lets you do covered calls in your retirement account. Some trades you cannot do in a retirement account, but a covered call you can. It's safe. It's simple. It's safe. Predictable. Do you remember that? Simple, safe, predictable. Well, I know exactly how much I'm going to make before I even do anything. Okay? Maximum profit, $100. Okay? I know what my profit's going to be before I even hit that button. Consistent. Okay? Simple, safe, predictable, consistent. Remember that? Well, consistent comes in with weekly options. Every single week, I can write a covered call. Drazik, good evening. How you doing, buddy? Whoops, hit the wrong button. Isn't that funny? There you go. No, come on. There, I got it that time. All right. What the hell? There, got it that time. Wow, there's buttons all over the place. I forgot where I was. Simple, safe, predictable, consistent every single week. So, a weekly optionable stock I can do every single week. Now, Coca-Cola, yeah, they've been in business for 100 years. So, yeah, I would love to get a bunch of Coca-Cola in every single week, get something coming in from it. All right, so $100 is the maximum profit here. Okay, the cost of the trade, including commissions and fees, $7,100 for 100 shares. So, let's do the math and see what that comes to for the rate of return on a weekly basis. So to figure out your rate of return, you take your profit. Well, here, $100. Grab out my calculator. Calculator. All right, here we go. Clear that out of the way. Clear that out of the way. All right, so I'm going to put $100. Now, to find out your rate of return, you take the profit, $100, divide it by the cost of the trade, including commissions and fees, $7,100. So, $7,100. Divide 7,100 comes to a grand total of 1.4% per week. Now, 1.4%, it doesn't sound like a lot of money. It doesn't. But here's the thing. 1.4% every single week. Now, let's multiply it out. Multiply by 52, because there's 52 weeks in a year. That comes to a grand total of 73% per year. Now, I'm pretty sure none of you here have consistently gotten 73% every single year for 5 or 10 minutes of work on a daily basis. Now, you do have to do something. Okay, look at it this way. If you got pets, you got to feed and water them every day. You have children, you got to feed and water them every day. You got a garden, plants, flowers, you got to feed and water them every day. Why is it people don't take care of their money every single day? It doesn't take that long. When I say the 10-minute trade, hey everybody, this is James from Dividend Stock Talk, brought to you by the 10-minute trade. The trading strategy I'm showing you here tonight was created for my 9-year-old daughter. In 2008, she jumped on my lap and said, "Daddy, what are you doing? Can you teach me?" How do you teach a 9-year-old how to invest in the stock market? Adults don't even get it right. And I'm supposed to teach a 9-year-old? It took me a while to figure it out. So I came up with a trading strategy specifically for my 9-year-old. So here we go. It had to be simple. She's only 9. It had to be safe. I didn't want her losing money because she's going to cry. Daddy can feel like crap. I'm going to be sleeping on the couch. Mama gets involved. Not a happy thing. Simple, safe, predictable. I want to make sure she knows what she's doing and what she's getting before she does it. Well, that's why I like the covered call, because it's predictable. I know exactly what I'm going to make before I do it. I got to start over again. Simple, safe, predictable, consistent. Consistency. Okay, I want to make sure she can do it over and over and over again. And then, number 5, no way for her to lose, all within 10 minutes or less. So a 9-year-old, 10 minutes or less, simple, safe, predictable, consistent. So I had to come up with 5 rules. Okay, now I'm going to let you know right here, there ain't going to be a sales pitch at the end. I'm not going to try to sell you anything. I got a bunch of shit to sell. You all know that. You know how to do it. Okay? I'm not going to try to do that. I'm just here sharing with you, teaching you what I know, and also creating a video log. What do you call that? A video log documentary for my children and grandchildren. Hi guys, how you doing? Because when I'm gone 10, 20 years from now, they'll have all these videos to go by and say, hey, how did Papa G do this? Okay, so simple, safe, predictable, consistent, no way for her to lose. Okay? Less than 10 minutes. Less than 10 minutes every single day. That's an hour. An hour out of your week to make 1%. Now, I know it doesn't sound like much, but when you get to my age, when you have 40 or 50 years worth of savings and you're looking at it, okay, yeah, it's $5-10 a week, but over a 40 or 50 year period, well, now you're looking at, what do you got, 5 digits, 6 digits? So on a $100,000 account, 1 hour a week is $1,000 an hour. Think about it, $1,000 an hour. That's on a $100,000 account. If you have 500,000, well, that's $500,000 for 1 hour. The numbers change dramatically the older you get, and the beauty of compounded interest. You're making 1% a week, so 1% week 1. Then week 2, you're getting 1% plus 1% of the first 1%. And then week 3, you're getting 1% plus 1% of the 1%, and then 1% of the 1% plus 1%. And then it just snowballs. And then over the years, it just gets so freaking huge, it's unbelievable. Anyway, so I'm going to write that one down. Coca-Cola, 1.4. All right, next on the list. AD. What the heck is AD? Somebody gave me AD to look at. Does anybody know what AD is? I got to get out all this stuff, get back to 0, and that would be right here. AD would be, allowance royalty. Yeah, no. Sorry, no to that one. Lowe's. Oh, it wasn't AD. It was H. I can't even read my own writing. Isn't that terrible? Home Depot. HD, not AD. HD. All right, here we go. High, low. Where was it? Where is it? Look at the motion. Up, down, up. Well, that's pretty simple, right? The current price right now is $370.40. 370 with 40 little pennies running around. So the 370 is going for $515. Well, Home Depot is a dividend king. Another company that's been in business for over 100 years and consistently increased their dividends for more than 5 decades. So you're wondering who those companies are. Here's one right here. Home Depot. Home Depot, Lowe's, Coca-Cola, Pepsi, Colgate, Palmolive, Procter & Gamble, blah, blah, blah. All those companies consistently profitable year after year after year after year. All right, so Home Depot. The numbers look good. Now let's take a better look at the chart. We're going to try to go a little bit quicker. The low of the year was a year ago. Check that out. A year ago, 323 a year ago. The high of the year, 439, that was in the end of November. Okay, so the last 90 days, or the last 3 months, okay, last 3 months, here we go. High low is, look at this, down, up, down, up. Okay, it's actually changing right there, right in front of our eyes. See, we're looking for one of these, see? It drops, consolidates, and then goes back up. Well, here's the high here. It drops, now it's consolidating and going back up again. So let's zoom into that. Last 30 days, yeah, there we go. Here we go. Last 30 days, check that out. Nice slow incline to the high. 30-day bottom, 30-day top. What do you think happens? Profit taking. There you go. So here we are right here. New bottom. Now it's going up only 1 day. I like 2 days of the upside, and then on the 3rd day, I would like to jump in. So I'm going to write I'm going to write Home Depot down for next week because I'm thinking if tomorrow she's higher, that means that's 2 days to the upside. On the 3rd day is where I would jump in if it goes up 3 days in a row after a new bottom. That's just my rule for me. You guys got to figure out what works for you. Okay, Home Depot. Next on the list, Lowe's. Yes.
Can you look at HRL when you have a moment?
Hormel?
Yes.
Ah, gotta love Hormel. Another dividend king. HRL, Hormel. Ooh, look at that. High, low, was, is. Look at the motion. Up, down, up, down, up, down, up, down, up, down. What's going on here? 30-20. The 30s are going for 90. The 30-50s are going for 65. Well, both of those numbers look good. Okay. Just because the numbers look good, and Hormel is over 100 years old, and they are a dividend king, which means they're consistently profitable for more than 5 decades. So everything looks good so far. Let's zoom in a little closer to see if it's the right time to buy Hormel. Because just because the numbers work doesn't mean it's the right time. I don't want to buy when it's dropping, and I definitely don't want to buy it when it's at the high. All right, so let's go a little closer. The high of the year was a year ago. That's 35.02. Right? She drops, retrace, drops, retrace, drops, retrace, blah, blah, blah. Okay, here's the bottom here. The end of February, 27.59. But look at that. From the end of February, the bottom, she went up, down, up, down, up, down. Now she's going up again 2 days to the upside. Okay, so the bottom was Thursday. Let's zoom in a little bit closer so you get a better idea. Because this is the last 90 days. Okay? High, low, was, is. Look at it. Up, down, up, down. So let's go a little bit closer. Remember that commercial from the 80s? Get a little closer. Don't be shy. Okay, here we go. 30 days ago, we're at 29.60. Drops down to the bottom, 28.80. Shoots up 30.50. Back down to 28. Now she's back up again. Okay. How much higher is it going to go? Thursday was the bottom. Friday was higher. She gapped up. Today, gaps make me a little nervous. Okay, the reason why a gap would make me nervous because they have a tendency to fill. Okay, is it going to keep going up and then come down to fill that gap? Or what happened here for a gap up to happen? Don't know. Well, let's take a gander at it. All right, let's take a look at seasonality. Now, if you don't know what seasonality is, let me briefly explain it to you. This is called a seasonality chart. Over to the left, January 1st. Over to the right, December 31st. The blue line represents the movement this year. Okay, this is what it's done this year. The red represents 10 years of average movement. So what does it do in an average? Down, up, down, up, down, up, blah, blah, blah. This is the average movement. Uh-oh, had a problem over here on YouTube. Okay, next. No, it's not made for children. Go live. And let's do this again. All right, so that being said, here's the area I want to look at. Because this is the 10-year average. That's 2015, 2016, 17, 18, 19, 20, 21, 22, 20, so on and so forth. 10 years. This is the average move. So I want to zoom into this and see where we are now. Okay, so I want to take right there and go here and now look at this. Now, it doesn't fill me with a bunch of warm fuzzies. Okay, because you can plainly see this thing has a tendency to go down a little bit. Not huge, but still go down a little bit this time of year. Now, this is history. History just gives you an idea of what it does normally, business as usual. But we know we're not in a business as usual type of atmosphere now, are we? Anyway, so number one, I like Hormel. Dividend King. It's a no-brainer. It's a yes. However, is it the right time? Now, historically speaking, she has a tendency to go down, but I know you guys are going to hate this, but the current trend trumps history. It's better than the current movement. Okay? The trend trumps the history. So if it is trending to the upside, that's more than likely where it's going to continue going. But this is not crystal clear. This is a little bit on the cloudy side for me. Okay? Because you have the bottom, which is Thursday. Friday was a little higher. Today's a little higher. So tomorrow, hypothetically, should be the deciding factor for me. Okay? Not today. So let's go back and see what those numbers look like. So the 30-20, the 30s are going for 90 cents a share. That's more than 1%. The 30-50s are going for 65. Now I'm going to do the 30 only because it's a safer trade. I like safety, especially at my age. Okay, let's go there, and we want to look at covered stock. There we go, and we said the 30s right there. Now, just one contract at the market right there, and here it goes. Ready? Here's Johnny. Buy one covered call Hormel. 100, it's the weeklies. 6 June 25. That's next Friday. Not this Friday, next Friday. The $30 call option against the Hormel stock to open, which means we're doing two trades. Buying the stock, selling the option. It's very important if you're talking to your broker to say it slowly and enunciate each and every single word. Because if you say it all at once, it just doesn't make sense. You got to say it slowly. Buy one covered call against Hormel. 100, which is the weeklies. 6 June 25. That's the date. Yeah, each little entry makes sense to someone. Okay? The $30 call option against the stock to market to open, blah, 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 all that. So, first thing we'll look at, what's the profit? $77.50. Was it costing me? $2,900. Well, that's not a lot. Let's check out the math, because the math never changes. Calculator. Clear that. Taking the $77.50, that's the profit. We're going to divide it by what the trade cost. And remember, when we're changing what we're thinking. We're buying a cash-producing asset. Well, the cash-producing asset is 100 shares of a company. Well, this just happens to be 100 shares of Hormel. Hormel's been around for 100 years. $23. Okay, so my first week profit is going to be $77. So what does that equal? 2.6. Now, we saw what 1.4 looked like. Can you imagine what 2.6 every single week looks like? Especially on a company that's over 100 years old, consistently profitable, shares their money with their shareholders for more than 5 decades, and it's not 100% in a buying opportunity, but it's got 2 days in the buying opportunity. I like 3. 3 days the upside. I like to get in on the 3rd day. This one only has 2. So I would wait and look at it tomorrow, see what happens tomorrow. If she jumps up tomorrow and keeps going, yeah, that's a sign for me to jump in. Now, you guys all got to figure out what works for you. I'm just showing you what works for me. All right, so that being said, 2.6% every week. Well, for 1 year, that would be 138%. Can you imagine that? 138% for 1 year? On a simple trade that takes less than 5 minutes. All right. Next, let's get this. Delete that. Let's go back to this. And we're going to go back to the next stock. All righty. So I hope that worked out for you. I like Hormel. Next on the list, Lowe's. Let's take a gander at Lowe's. All right, we're going to take a look at Lowe's. I'm going to take some more questions. Nice. Got to love it. High, low, was, is. Look at this. Up, down, up, down. Okay, 225. Okay, that's the current price, 225. 225's $4. Hell yeah, I'll take that one. That's almost 2% also. Well, let's take a gander. A year ago, Lowe's was at 215. The high of the year, 286. The low of the year, well, 286, that was in middle of October. The low of the year was the beginning of April, and that was 205. Look at your last 90 days. Okay, last 3 months. High, low is, look at this. Down, up, down, up, down, up. Same thing. Okay, we got 2 days right here. I'm looking for consistency. Well, I like Lowe's. Lowe's, again, exactly like Home Depot. Consistently profitable, consistently making money for almost 100 years. Okay, why not? We got some questions over here. Oh, Rogerio, the picture is mirrored. Yes, it is. That's just YouTube for you. YouTube doesn't have in the camera capabilities to invert the camera to show it to you the right way. But over on TikTok it does. So you can go over there. When to sell NVIDIA? Well, Sancho, you should have never bought it in the first place, in my humble opinion. But I can't tell you what to do. I know nothing about you, so I'm not telling you. I'm just saying I would never buy it. Okay, it doesn't make sense to me. The numbers are absolutely horrible. Espet Big Gamer Yufei. I have no idea what that means. Do you trade gold spot? No, I don't. That answered all those questions pretty quick, wasn't it? NVIDIA earnings come out tomorrow. Okay, motor oil, I don't do NVIDIA. The numbers just don't work for me. Go take a look at NVIDIA, then take a look at the book value, take a look at the revenue per share, and then take a look at the dividends. Then come back to me and tell me how wonderful NVIDIA is. Until then, I don't like NVIDIA. The numbers just don't work. All right, so let's take a look at here. Greg Tesla's no. Rogerio. Will we have a new leg down in the S&P 500? Okay, Rogerio, I don't do the S&P 500 either. If you take a look at the S&P, okay, the spiders, SPY, yeah, those numbers are horrible also. Take a look at the good numbers. You need to look at the stock that are teaming up with NVIDIA. No, I don't. Okay, now motor oil. I'm looking for consistency of profitability. Okay? Now, when I say consistency of profitability, I mean every single year. For the last 20 years, the number should be higher and higher. You know what? Let's go to NVIDIA, and I'll show you exactly what I'm talking about. There's always someone that questions, and I say, okay, fine, we'll do it. NVDA. NVIDIA. All right, you ready? Here we go. Now, I always tell everybody, if you're going to be investing, you need access to a financial website. Okay? Now, you will notice that this is Yahoo Finance. NVIDIA Corporation, yay! $135 per share. Okay? $135 per share. Now, let's come down here a little bit lower. Okay? Now, earnings per share, $3.04 per share. Earnings, $3.04 per share. Okay? Forward dividend and yield. The dividend is 4 cents. That's 1 penny per quarter. 4 cents, that's it. $135 per share, and you're getting 4 cents in profit. That's it. What is that? Comes to point. You ready for this? 0.03%. Now, I don't understand at all, and someone's going to need to explain it to me in a manner in which I will understand, because it makes no sense to me whatsoever. When it says 0.03, do you have any idea what the rule of 72 is? The rule of 72 is whatever rate of return you're getting, you divide it by 72, and it tells you how many years it's going to take you to double your money. Think about it. 0.03. That's 3/100ths. 3/100ths of a percent. For the fun of it, let's do this right here. Okay, clear. 0.03. Is that right? 0.03. Divide 72. That's not right. 72 divide 0.03. There you go. 2,400 years to double your money with NVIDIA at 0.03%. Explain to me how that makes sense. All right, anyway. Now let's take a look at historical performance for NVIDIA. Okay, for that we're going to look at historical data. down here on the left, historical data. Okay, historical data gives you all the history of the company. Gives you the opening of the day, the high of the day, the low of the day, the close of the day, how many shares have traded. Look at it. Okay, the date, the opening price of the day, the high price of the day, the low price of the day, the close, the volume, how many shares have traded. Okay, well, great. What I want to look at, historical prices, I want to look at the dividends. How often have they increased? All right, I want to look at all of them. All right, so it goes all the way back 2012. Well, that's not 20 years. Why the hell are we looking at it? Hold on, it gets worse. Look at this. 0.001. That's 1/1000th of a penny. And you think that's good. Okay. To not even 1 penny yet. This is 4/1000, 4/1000, 4/1000, 4/1000, 4/1000, 4/1000, 4/1000, and then 1/10, 1/100th. Yeah, no. The numbers are absolutely horrible with NVIDIA. Anyway, you do what you want to do. I try not to get into that. Have you looked at HPQ lately? Ooh, Drazik, love HPQ. We're going to take a look at that next. Let me answer some questions first. Alrighty. Plumber Bob. Hollywood, Edwin. Where are we? I missed some of these. Missed some of these companies. Okay, Matt D. Hold on. All right. NVTS. Very good working with NVIDIA. Don't care. What do you think's happening in GameStop? It's looking like it's going to blow. Okay, so none of your business. Okay, I don't do GameStop because it doesn't have dividends. Terribly sorry. Matt D, what's the minimum compounding dividend you would hold as a dividend company? 20 years. They have to increase their profitability for 2 decades. That's it. And I don't hold on to anything. The longest I've ever held on to anything is 9 months. To me, it just doesn't make sense. You know, I'm not retired. You know, I'm retired. I'm not working anymore. If I was working, yeah, let it ride. You know, wait until I'm retired. Build up that nest egg. But, well, I'm retired now. So the money has to come in every single week. All right, let's keep on going. Nanya. All right, Matt. What's the matter? I did that one. I feel sorry for all of you who are having your life swayed by the numbers on a screen. All right, I love that idea. Okay, have you noticed anything about the stock market? The rules are not being enforced. Nope, haven't noticed that. Apple making move upward. Hey, Gary, all righty. We don't roll dice, dear workers. All right. I can't read that name. It looks like Beckham. I don't know. Apple. We'll take a look at Apple. Okay, so over here. What do we have over on TikTok for questions? Anyone trading Tesla breakout? No, I don't do Tesla. I don't know why people just don't understand that one. I mean, I understand it. People like certain stocks. Great, fine, dandy. Well, I don't do Tesla, and I don't know why you keep asking me. Do you trade Ford, or do you think it'll go bankrupt? I do trade Ford. We looked at it a little while ago. It's not an opportune time to look at Ford. Ford went up for 6 weeks in a row. 6 weeks in a row, it just went up, 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 up. It finally got to a point where they started taking profits. So now it's going down, 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 down. At some point, it's going to stop and turn around and go back up again. That's all stocks do. They go up, they go down. They go up, they go down. That's all they do. If you find a company that you like, well, just keep an eye on it. Wait for it to hit the bottom. Because it's going to hit a bottom, it's going to turn around, it's going to go back up again. That's all they do. Okay, I've never seen a stock that just went straight up or just went straight down. Okay, so let's keep on going. Do you place any emphasis on stock buybacks? Nope. Do you only trade stocks and options? So wait for the fill. That's not what I said. 301 chest. What was that? 3A guest. All right. I have insider information. Okay. SP, good evening. Cadillac. Yo. All right. Good evening, good evening, good evening. Intabel, good evening. Intabel, good evening. Dina, Macy's. We'll take a look at that one in a little bit. Do I trade FX? No, I do not. Dina wanted to take a look at Macy's. We'll write that one down. We'll take a look at that in a little bit. Adopa. No comprend. Okay. Hi, do you do weddings? Absolutely. Believe it or not, I was a head waiter, and my job was to take care of the bride and groom and the bride's table. And the, what do you call it? What do we have here? Lisa, good evening. Just got no Stroms tonight to interrupt. Oh, okay. Okay, life branches, wealth, and believe. Why? Why don't I trade FX? I tried it years ago. It's too time consuming for me. Are you a full-time trader? No. I trade for 15 to 20 minutes a day. That's it. Okay, in the morning, I have a morning trading group. We get together, we do some trades, and that's it. And I walk away from my computer for the rest of the day. Hello from, what is that one? Pichula. Julio Ortiz. Good evening. All right, so let's keep on going. And Kalankon, the black. Okay. Is not love not unlike the unlikely? Not is the unlikely too. Okay, whatever. All right. Rachel, good evening. Plumber Bob, good evening. Roman Aliens, Fax, Edwin, Cool Beans. Hollywood, what's going on? Tesla, Rand is a smart man. Sure he is. Tim Bex, Wally World. WMB, WMT, Walmart. Did Pepsi hit bottom yet? David, we'll take a look at Pepsi in a second. PEP, I just got knocked off of another one. Let's try this one again. I don't know what's going on with YouTube. All right, here we go. That's going to be starting again. Hello from Ghana. New to your video. Good evening. I meant, is your main income sourced from trading profits? My only income comes from trading profits. Okay? Okay. The funny thing is, when you retire and you're like me, you can keep working, but you just don't get paid anymore. So I don't punch a time clock anymore. I don't pay taxes anymore. I don't do all that corporate stuff anymore. I do whatever I feel like it in the morning. I wake up. I make a few trades in the morning. I take a look at my account, and then I go about my day. I forget what I did today. It is what it is. Oh, Drozic, we're going to look at HPQ. So let's go take a look at that one. Let's get out of this stupid thing. Let's get out of that. Hewlett-Packard. Believe it or not, I actually did some Hewlett-Packard today. Because the numbers just looked good. All right, so let's take a gander. Hewlett-Packard, HPQ. Take a look. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at the motion. Sideways, down, up. Okay. Sideways, down, and then up. Not that difficult, right? Great. Where's the number? 28.34. The closest strike price to 28.34 is going to be 28.50. Come on. You know it. 28.50. 28.50. Let's open this up a little bit so we can see better. 28.50 right here. 96 cents. That's more than 3%. You have any idea what 3% every single week is? Well, Hewlett-Packard. Number one, have you heard of them? Well, Hewlett-Packard, I believe they're a dividend aristocrat, which is 25 years of consistent profitability. Not quite a dividend king, but still a nice company. All right, so let's take a look. The numbers look okay, so let's go back to the chart and see if it's the right time. A year ago, we were at 33. Well, the high of the year was 39.62, and that was the end of November. Now, from there, the bottom was in the beginning of April, and that was 21.21. Well, look at the last 90 days. All right, the last 3 months. Last 3 months. High, low. Where was it? Where is it? Look at the motion. Down, up, down. What's going on right here? Give me a better idea what's going on. So let's go to the last 30 days. Right there. Here we go. Look at that. Up, down. Now, is she turning here? Don't know. Because it looks like the high was last Tuesday. Okay, Wednesday lower, Thursday lower, Friday lower. Okay, today is a little higher. Okay, so exactly what does that mean? It doesn't really mean anything. I like 2 days of the upside, and now we only have one. Okay. What do we have over here? Hello from Ghana. Are you buying or selling NASDAQ? I don't buy or sell NASDAQ. Sorry. Can you glance at Eli Lilly? No. Eli Lilly's out of my price range. I don't buy stocks at $1,000 a share. Sorry. All right. Just Sunday. Hi. Carlos, hello. Sean, what's going on here? Dividend investing for weekly cash flow. Do you recommend trade options? Yeah, I do, but only if you know. Jeff, sideways. Okay. Sean, do you mess with trade options unless you have an insider information? Oh, thank you, Sean. I'll keep that in mind. Have you glanced at Ally Bank? No. We'll take a look at that one. A-L-Y, is it? A-L-Y, Ally. Do I do crypto? Okay, Ferdinand, no, I do not. Okay, no crypto for me. Sorry. All right. High implied volatility, that's why. I have no idea what you're talking about. Ensure. Okay, North Shore, I'm assuming that's what it means. Now, you got to realize I'm not ignoring what you're saying. It's that there are so many conversations going on at once. High implied volatility. That's why I have no idea what you're referring to. So if you can enlighten me, that would be great. I do read each and every individual question. Stone Furry, what's your thoughts on Walgreens? Saw they weren't doing well on the news. No, we were trading Walgreens all last year. They got a buyout offer, and then all the numbers just changed to unattractiveness. So we haven't done a Walgreens in months. Digital Jedi 2, Johnson & Johnson. Okay. Felix, hi James, what did you buy this morning? I bought some Hewlett Packard this morning. Did you answer the GameStop question? Yes, I did. No dividends? No, thank you. That's my thoughts on GameStop. Like the setup on GameStop and check the chart. Yeah, none yet. Terribly sorry. No dividends. No, thank you. It's actually that simple. I got 2 criteria and only 2. Okay? 2 criteria. You ready? Consistency of profitability for at least 2 decades and weekly options. GameStop does not fit. Walmart's up 44% past year. Okay, Walmart is on the list. We'll take a look at it. Okay. John, companies might have dividends, but that doesn't mean they can afford them. Thank you, John. I'm going to sleep better tonight knowing that. I appreciate that. Next question over here on TikTok. What do we have? Scary. John, never heard of that company. Quantum Antenna. What's a good strike price for Riley? 3. I got Riley in 5 different accounts. Most of them are selling the $3 option for this week. BBAI, yeah, no. ATKR, no. CYDY? Sorry, Jared, no. Tesla's up almost $150 with 2 weeks or less. Okay, no. VizX, Irma, VizX, no. Do you have dementia? Yes, I do, but thank you for pointing it out. Den, popped up on my feed and I'm interested in what y'all are talking about. I'm assuming it's because I started investing. Is that what this is? Den, I'm looking at investing in dividend stocks only. Specifically, companies that have increased their profits for more than 2 decades and can give me a 1% every single week. That's a 50% return per year. Prime Lucky, hello to you too. All right, keep on. Savage Bill, how you doing? Ellie, Mr. Nice Guy, banks and brokerage stocks tend to trade sideways. Thank you. Randall Ray, if you had Apple with an $8 cost basis, what covered causes would you sell? Well, it would depend. Hold on, Randall. Irma, Visa, absolutely. John Doe, Citigroup, gotta love it. They have well, yes, they do. Citigroup is on my list. Okay, we'll write Citigroup down. And Irma wants to take a look at Visa. All right, Visa. We'll take a look at that one also. Delta Airlines, huh, Jason? DAL. Okay, you guys got to hold up on all these. I like Mug. Oh, Hollywood. What the heck is Mug? Really, Hollywood. MUG. I'll take a gander at it. Triplets, good evening. Anderboy, SMR. Never heard of it. SMR. Okay. Ancillary Mike, good evening. Terry Hillman, Jojo, what's happening? Dopey. Dupit, good evening. Suppit. Will, every single week you get dividends. Will, that's not what I said. I said I write covered calls every single week and collect 1% every single week. Or close to 1% every single week. Do I use Fidelity? No, I do not. What's your average cash flow per contract per week? Well, lately it's been like 2%, Mr. Nice Guy. I thought you only get dividends like once a year. Okay, Will, there's 10,046 companies this week. Out of that, about 5,500 pay dividends. Okay, now you get a choice. Once a year, twice a year, 4 times a year, or once a month. All right, what do we got here? How to start. Prime, just sit, chill, relax. Are you trading stocks and options at the same time? Yep. How do you select the stocks? Oh, that's easy. I'd like to understand the method you're using. Could you elaborate a bit from the beginning? I appreciate your help. Ruggiero, you ready? Here we go. I'm going to actually record this one just for the fun of it, because it is fun. All right, you ready? Ruggiero, here we go. Hit the record button. Good afternoon. This is what I'm doing. I'm investing in pre-qualified dividend stocks. Those are companies that have consistently been profitable for at least 2 decades and have weekly options. The reason being, weekly options allow me a weekly cash flow. My goal is 1% per week using nothing but pre-qualified stock. Now, I buy them just before the EX date, because just before the EX date, the stock has a tendency to go up in value, thus giving me an edge knowing that stock is going to move at a certain time. So great, now I have to pick the right strategy. The strategy I'm using is simple, safe, predictable, and consistent. 1% per week. That is called the covered call. Strategically placed, and when the stock is in an upward trend, it's just a no-brainer for me. Ooh, that was good. 40 seconds, not bad. Okay, that's roughly what I'm doing. Next. James, you should start your own crypto coin. Thank you. I'm actually starting my own hedge fund. Still looking for board members. Okay, so we got like a half a dozen. And we need another half a dozen before we can actually start everything up. Who do we have here? Arnold. Good evening, Arnold. And how are you today? What's your opinion on the bill hook? What's your opinion on Amazon? Nuclear fusion. Now, I like nuclear fusion, but Amazon, they don't have no dividends. They are a no. No dividends, no thank you. All right. What do we have here? With all the tariff talks, I've had to readjust my discount rate for cash flows. Okay. Multiple times. All righty. HP Oil and Gas. All right. Do you also sell cash secured puts? Yep. Jeremy, nice. UEC, no idea. Never mind about HP. Okay, Lisa. All right, not a problem. All right. Hey, the Mortgage Magician. I haven't heard from you in a while. Goat Cart 8. All right. Trading Mustafa. Gold. Yeah, no. Uranium Corporation. No. All right. Not allowed forces you. I have no idea what that means. Martin. I'm seeing a lot of dividends dropping on some stocks. Okay. Enderboy, thank you. North Shore, immediate 2. Okay, North Shore, you just keep giving these small answers, and by the time you come up with a small answer, immediate 2, I forget what that goes with. So immediate 2 means absolutely nothing to me at this moment because I don't know which context you were using it. Don, good evening. Okay, thank you. I'm not having a problem with it, but all right. 1% for a week. Are you selling next week's option? That's not a week. Okay, thank you, Mortgage Magician. But if this week to next week, if every trade I do next week brings me into 1%, that's 1% every single week. Okay, so Mortgage Magician, hold that thought for 1 second. Let me just show you something quick, just in case you're curious. Now, no, wrong one. Here we go. Okay, here behind me is the 10-Minute Trader, my website. You will see 3 accounts. 1, 2, 3. Now, Mortgage Magician, you ready? Now, if you just highlight this right there, you will notice 5/12, which is May 12th to May 15th. That is 1 week of trades. Now, you take 1 week of trades, covered call. I bought Hertz, 684. I sold the 650s, picked up 75 cents per share. Now there's 3,100 of them. So 3,100 times 75 cents. Well, what is that? Let's find out. What the hell is my calculator? Okay, so here's my calculator. Okay, let's clear that. Okay, so Mortgage Magician, are you ready? All right, first, Hertz, 75 cents. 18 and 13 is 31. All right, so 3,100 shares. Okay, 1 contract equals 100 shares. 31 contracts equals 3,100 shares. Now, at 75 cents per share, okay, multiplied by 75 cents per share, comes to a grand total of 2,325. Now, for the fun of it, we're going to add that to the memory so we don't lose it. Clear that out of the way and go to the next trade. The next trade is 20 contracts at 7 cents a share. Well, 20 contracts at 7 cents a share is only 140 bucks. So 140 bucks. We're going to add that to the memory also. Clear it out of the way. Next, we have Dividend Energy, DVN. Well, that's a whopping $7. That's it. $7, that's it. But we're going to add that also. $7 plus memory. Clear that. Okay, Dividend Energy right there. Macy's, 45 times 5. That's not a lot. Here we go. 4,500 shares multiplied by 0.05. That's 5 cents a share. 225 bucks. Okay. Add that to the memory. There you go. That was that one. U.S. Steel, one contract at $116. $116 plus memory, clear. The next U.S. Steel, 10 contracts at $141. That's $1,410. $1,410 plus memory, clear. 5 contracts, U.S. Steel, $123, or $1.23 times 500. 123 times 500. 615 plus memory, clear. Okay, that was U.S. Steel. Hertz, 31 contracts, 3,100 shares times 12 cents. Okay, you still with me, Mortgage Magician? Okay. 12 cents multiplied by 3,100 shares equals 372. Let's add that to the memory. Okay, clear. That was Hertz. Riot, 11 times 2, 1,100 shares at 2 cents a share. That's $22 plus memory. Thank you. That one. Okay. Harley Davidson, 22 contracts, or 2,200 shares times 10. That's $220 plus memory. And lastly, Kohl's. Look at this one. Mortgage Magician. You ready? Look at this one. 35 contracts at 47 cents a share. So 35 contract is 3,500 multiplied by 47 cents. Ooh. That's never good. Uh-oh. 3,500, 47 cents. Ooh. What was it again? That wasn't the one I was doing. That's the one I was doing right there. Okay, 3,500 times 47 cents. 47 cents equals 1,600 plus memory. Clear. Okay, so memory recall. All these trades right here, every single one of these trades, and I gave you the date. Okay, that was last week. Comes to a grand total of $7,097 for just this 1 week's worth of trades. Okay, doesn't mean anything unless you have something to compare it with. All right, so what do we have to compare it with? Okay, $223,000. Okay, so let's take the calculator. The profit was $7,097. Okay, but I started with 223,000. So let's divide it out. Okay, divided by 223,348 comes to a grand total of, are you ready, Mortgage Magician? 3.1%. Okay, so yeah, I don't get 1% this week. This week I get 3%. Now, I'm not quite sure why you're not getting 1%. Well, you're not part of my morning trading group, so you don't see everything that I do. You just come here every once in a while, and you do whatever you do. Okay, let's get out of there. Let's get back to where we were. So if you want, if you're curious, Mortgage Magician, every single trade I made this year is available. Okay, this is week number 8, May 19th to May 23rd, May 12th to May 16th, May 5th to May 9th. Every single week is here. Okay, we're in week number 21. Every single week. You can check out every single one, and you can do the math yourself. Okay, 2,000 shares. Harley Davidson. These are the options that I've sold. These are the premiums I've collected. Here are the timestamps. Okay? Anyway, let's move on. So, to answer your question, if I do trades this week, whether or not the option is for next week, 3 weeks, or 4 weeks out, the money still came into my account this week. So if I click on any one of these right here, and whatever this says is, to me, is really irrelevant. Okay, this is what I'm interested in. Okay, 30 contracts at 15 cents a share. So what's 30 contracts times 15 cents a share? Well, it's 3,000 times 15 cents. Okay, and then the next one, 2,000 times 9 cents. 400 times 39. 1,000 times 15. 7,800 times 6. The math is simple. Okay, whatever it is. Doesn't matter what the dates are here, or what the call strikes are here. What matters to me is what is the cash flow that is coming in. Cash flow coming in divided by the account. How much is in the account? Well, you saw it's 223. Okay, is that 1% or more? Okay, so on a $200,000 account, 1% is $2,000. It's simple math. 1% of 223,000 is $2,200 a week. Well, for 1 hour of my time, I think that's time well spent. And it is more than 1%. So let's get back to where we're talking about and not do, yo, baby's in the house. What's happening? All right, so let's keep on going. Jim, I'm going to apologize. 10 years straight. I have no idea what that means. Okay, gold, no. How do you buy? All right. How to sell calls and puts. Rico, sit back, relax. I'm here every single night. I will show you per week. Now, I've been doing this for a while, okay? There are a lot of naysayers out there. Hey, wonderful, great. It is a very slow, very boring, very monotonous, very repetitive. You take a look at these companies here. Intel, ASO, Mara, Kohl's, Foot Locker, Riot, Harley Davidson. I do the same stocks over and over and over again. Why? Well, because they give me money every single week. And that money they give me every single week comes to over 1% of my total assets. So if I have $200,000 a week, if I have $200,000 in my account, I want $2,000 a week. Well, this week, not this one, this week here, which is week 13, March 24th to March 28th, well, this account was 1.25. This account was 3.1. This account over here was 1.31. Okay, I've hit 1% every single week in every single account except for one. One account out of 21 weeks, I missed hitting 1%. Other than that, I've hit 1% every single week so far this year. So let's keep on keeping on. Can you tell me where one can find a stockpile? Yep. Trading Mustafa. What fails in the markets? I have no idea what that means. I mean, I understand the words. Don't get me wrong. What fails in the markets, bro? I understand all those words. I'm not quite sure in what context you're referring. Do you own Misty? Oh, hell no. You need to take a look at the numbers. MPW has a high dividend. Can it work? Well, I like MPW. I actually own some MPW. So, yeah, it's working nicely. Gope Lucky. Gope Lucky, good evening. All right, let's keep on going. What other questions do we have here? There you go. TikTok driver, good evening. Haphazard, back again. Cool. Moa De Niro. If it's a sure thing, why wouldn't everybody do it? Because everybody doesn't know it. Savage Bill, ATKR. What the heck is that thing? What is ATKR? Second time someone's asked me about that. ATKR. Add torque? What the heck is that? Let's try it one more time. ATKR. Hell no. There you go. You got your answer. Savage Bill, ATKR, hell no. Christopher, thank you. It's not what I was saying. Obviously, thank you. KG, what's happening? Okay, we already did Lowe's, Haphazard. Hormel earnings the 29th. Yep, we just did Hormel a little ago. Which stock is he doing? We already did a lot of stuff. 2.37 last month dividends, easy money. Valerius, good beans. Misty has 0 signs of erosion. Up 1.7. Oh, nice. Somebody wants to question me. Okay, love it. So, Valrius, do me a favor. Okay, now Valrius, I'm going to be here for the next half hour. Okay, I'm here till 11:30. If you take a look at Misty, M-S-T-Y, what you seem to enjoy. Okay, tell me, out of the last 2 decades, last 20 years, how many years has MSTY consistently increased their dividends out of the last 2 decades? Okay, give me that number in the chat, and then we'll take a look at it. Okay, TikTok driver, we already looked at Hormel. Brian, good evening. Neo, if I own 1,000, can you show the process settle in 10 calls? Hey, Neochromium, sure. Basically, if we have 1,000 shares of AT&T, that's what we have pulled up right now. It's currently at 27.59, so let's do the 27.50s right there. So if I own 1,000 shares and I wanted to sell 10 contracts, the current price, 27.59, I'm going to do the 27.50s right there. I'm going to sell those, and basically that's it. Okay, sell 10 contracts, which is 1,000 shares, because one contract, 100 shares, 10 contracts, 1,000 shares. Okay, so 10 AT&T, 6 June 25. That means it expires next week. The 27.50 call option, and it's currently going for 36 cents a share. Okay, and how much does that come to? That comes to $353. That's what it comes to. All right, TikTok driver, Lowe's, we already looked at that one. Show me the money, Chris. I don't have any money handy, so I can't show you anything. Ooh. Yeah, no, sorry. ENB, Enbridge, wait a second. Doesn't Enbridge, like, not fit what we're doing? Enbridge, ENB. ENB, Enbridge. Okay, you see it? ENB, Enbridge. 20 June, 18 July, 17 October, 16 January. Those are months of the year, Justin. Okay, when I say weekly options only, ENB is a no. Okay? Koki, NVIDIA. Tesla, huh, Koki? You like Tesla? TSLA. Tesla, you ready? Koki, you ready? Here we go. Tesla. $362 per share. Okay, take a look. Dividends only. There are no dividends in the selected time period. So basically what that means, no dividends, no thank you. Okay, the name of the show is Dividend Investing for Weekly Cash Flow. No dividends, no thank you. 14 million in inventory. You come by every night and insult me. Fine. I could honestly care less what your opinion of me is. But if it's boring and you don't learn anything, why do you keep coming back? Interesting question. So I'll help you out. Let's go do this right here. Here we go. That ought to help out. All right. Let's keep on moving. I won't have to worry about him anymore. All righty. Happy GEO. Good beans. Jay Clarkey. What's happening? That's hilarious on NVIDIA. Well, think about it. Seriously, why would you invest in a company that's not consistently profitable? Okay, the numbers don't lie. Seriously, if you're buying a stock, I say it all the time, okay? 5 rules. Rule number 1, never buy something you don't understand. Apparently, people don't understand that NVIDIA pays 1 penny dividend. It's a $135 stock. It pays a 1 dividend every 90 days. That's 4 cents a year. That's 0.03%. You're going backwards with that. Inflation, even inflation at 3%. You're getting 3%. You're getting 0.03%. Yeah. Okay. Flash, how are you doing? Oh, look at this. Blue Veracity. Dow. Ooh, okay. I like Dow. All right. Hold on a second. 3 Ghosts. Come on. You've been here long enough, dude. You know that Google does not have dividends. They have 1 year. They have 19 years asking me about Google. Estee Lauder. Irma. I love Estee Lauder. Okay. We'll take a look at it in a minute. I sure missed it. What happened to the 1,000 shares when the contract expires? Well, it would depend on what side of the fence you're on. Now, your 1,000 contracts, what's the number? Okay, what did you buy the stock at? What option did you sell? See, you're asking a question, but you're leaving out a lot of very important data. Okay, so your question is, you missed it. What happened to your 1,000 shares stock when the contract ended? My 1,000 shares of what? Okay, what did I buy it for? What did I sell? Okay, there's a lot of missing information. If you can give me the missing information, I can give you an answer. Oh, well, listen to that. Flash, way to go. Followed your strategy, making an average of 1.2% a week for the last 20 weeks. Awesome, Flash. Cool beans. I'd like to see what my Christmas present's going to look like this year, dude. Anyway, let's keep on going. Alphabet, no. Thoughts on XOM, ExxonMobil, yes. Thoughts on UPS. And STX, Seagate, due for some profit taking, probably. Okay. David, I hope that works out for you. Let's take a quick look, David. XOM, UPS, FedEx, FDX, TEM. That one I'm not so sure about, TEM. And Seagate, STX. All right, we'll take a look at it in a bit. Ooh, Lisa M, PPG. All right, 3A Ghost, BBAI, yeah, no. Lion, good evening. First time watching, thank you for reaching new stock traders. Chance, way to go. Meant to say teaching. Okay, Chance, thank you. Wells Fargo, ooh, I like that one. WFC, over 100 years old, that's a good company. If I wrote a contract, what happens to my shares when the contract expires? Okay, Anthony. Okay, so hypothetically speaking, if you buy a shares, hold on, let's go back to here. Let's look at Estee Lauder. Okay, so here's Estee Lauder. Ooh, nice. Okay, first and foremost, here's the high, here's the low. Look at the motion, down, then up. It's at $67. If you bought Estee Lauder at $67, okay? Now, hypothetically speaking, you're going to sell a covered call. More than likely, we're just going to use my example, 67.06, I'm going to sell the 67s, pick up 172. Great. Well, the options expire on Saturday, which means the last thing you can trade is 3:59 p.m. on a Friday. So if the stock is at 67.01 or higher come Friday, you get all your money back, plus you get to collect the premium, whatever the premium is, 67 or 172 per share. So if you got 170, if you have 100 shares, one contract, it's $172. If you got 500 contracts, it's $1.72 times 500. Okay, this price here is for each and every share that you own. If you own 1,000 shares, well, you get that 1,000 times. If you have 100 shares, one contract, you get that 100 times. So if the stock is at the money, which is $67 or higher, you get all your money back and you get to keep the premium. If the stock is at $66.99 on Friday afternoon, you get to keep all of this money and you get to keep the stock because it's below the agreed sale price of $67. So there's a lot of information you need to have in the whole equation. So if you bought whatever you bought it for, whatever strike price you sold on Friday, day of expiration, where did the stock end up? Higher or lower than the agreed sell price? The agreed sell price in this instance, $67. If it's higher than 67, you get all your money back, you keep the profit. If it's below 67, you keep the profit and you keep the stock, and then you sell it to somebody else next week. And you do it every single week until it hits your target. What's your target? $67. If you bought it for 67, you're going to sell it for 67. You're going to collect this premium every single week. All right. So hopefully that helped out. Prakash, good evening. Okay. Don't really understand that. All right. Islam, I don't understand that whatsoever. Thank you for teaching this. You're welcome, Luigi. Anthony, thank you. You're welcome. Okay, we are going to do Dow. Blue Veracity wants to take a look at Dow. Let's take a gander. D-O-W. Dow Chemical. Oh, look at that. It should take you 3 to 4 seconds. That's it, 3 to 4. The high, the low, where was it? Where is it? What's going? Down, sideways, down, up, down. Okay, here we are right here. This is today. That is last year. This is a 1-year chart. It gives me an idea of what's the stock doing this year. So what do I want to avoid? I want to avoid the high. I don't want to buy at the high, and I don't want to buy it as it's dropping. Well, if you look here, it drops, turn around, goes back up. You can't really see it on a 1-year chart, but we're going to squeeze in and take a look, closer look as soon as we progress if the numbers work. So let's take a look at the numbers. What am I buying it for? Well, currently the price is $28.92. Now, hopefully, I don't have to tell you what the closest strike price to $28.92 is. 29. Come on, guys, it's not that difficult. $28.92, the closest strike price. 29. All right, so the 29 is selling for 44 cents. Now, 1% of $29 is 29 cents. Now, is 44 cents more than 1%? Yes, it is. So it's more than 1%. Great. Now we're going to take a deeper look into the chart. What do the numbers look like, and is it the right time to buy Dow? Okay, the high of the year was a year ago, 58.45. The low of the year was the second week of April, 24.80. Well, look at the last 90 days. The last 90 days, damn it, hate when I do that. Last 90 days, high low is, look at this, down, up, down, and it's changing right here. Okay, it's very important, in my humble opinion, to get a good idea what the other investors are doing. Not just me. Take a look at this. 8,763,000 shares traded today just on Dow. So my few $1,000 isn't going to matter a whole bunch now, is it? Not when they get 8.7 million shares trading. All right, so let's zoom in a little bit closer because we see what's going on here. It's good to know what other investors are doing. Okay, it's high, she drops. Here's the bottom. This is your profit taking. Okay, once it gets down to a bottom, people look at it and say, wait a second, Dow Chemical under 26, I'm going to buy some. So you buy some, and then the stock goes all the way up. So it goes from 25 to 32. Well, 25 to 32, think about this. 25 to 32 is $7. Now, $7 is not a lot of money, but in comparison to the stock price at 25, well, $7 is more than 20%. It jumped up more than 20%. So yeah, profit taking again. There it is. And now it's back to 28. What's it doing now? Let's zoom in a little closer to get an idea of where do we think it's going next. Well, here's your 30 days. Here's your high. Here's your low. Okay, 30 days ago, we're at 30. She drops down to 28.50, shoots up to 32.50, and comes back down just below 28. Okay, well, today's a little higher. Here's your 30-day bottom. 30-day top, 30-day bottom. What usually, it's not guaranteed. There's only 3 guarantees in life. This ain't one of them. Okay, here's your bottom. 30-day high, 30-day bottom. Usually, at a 30-day bottom, stocks usually go back up again. I like 2 days to the upside. We have 1. I'm writing Dow down for the rest of the week to see what happens with it. Bitcoin, no. Don't do Bitcoin. Thank you. Alrighty. All right. Let's keep on going. Flash, good evening. Sabatu, good evening. Tilray, never heard of it. Apple, we haven't looked at Apple yet. Let's take a look at Apple. AAPL. Now, Apple, believe it or not, is not on my list. Apple does not have 20 years of increased dividends. So why do I look at it? Why do I trade it? Remember the 5 list I gave you. I gave you 5 lists. Okay, you got a pen, paper, aristocrats. List 3, dividend champions. List 4, dividend contenders. List 5, Mr. Warren Buffett's list. Okay, Apple is on Warren Buffett's list. That's the way I do it. Ajit, good evening. Flash, I'm glad it's working out for you. Laurie, way to go. Thank you for the encouragement there, Miss Laurie. Some old Dutchman. You mentioned rolling options forward. In what scenario do you do that? Okay, some Dutchman. It's always going to be about the numbers. Certain numbers are going to be factual and are never going to change. Number 1, what did I buy the stock for? When you buy a stock, that number never changes unless you dollar cost average down. Okay? Whatever you bought the stock for, that doesn't change. Number 2, what option did I sell? Number 3, where is it right now? What option did I sell against it? What's that at now? Am I at risk of losing? Okay? So once you understand those numbers, then you decide, does it make sense to take this trade and roll it into next week or the week after, whatever makes sense financially? Because what you pay for it, what you sell it for, what's it at now, is there a risk? That tells me whether or not I'm going to roll it or whether I'm going to let it go or what's going to happen. That's something I usually figure out on a Friday. Tengrika. Hey, James, can you look at PNC? Sure, why not? Wait a second. We're looking at Apple first, then we'll look at PNC. So hold tight for a second. Apple, here we go. Hi, hello. Where was it? Where is it? Look at this. Up, down, up, down. What's going on here? Well, let's take a look at it. First and foremost, before we look deeper into the chart, does it make sense? Well, current price right now is 200. Well, the 200 is going for 425. That's over 2%. Quick math, right? $200, 1% of $200 is $2. That's simple. Okay? The option at the $200 level is 4.25. Well, 4.25 is more than 2%. All right. So that being said, let's take a deeper look into the numbers. A year ago, Apple was at 190. The high of the year was just right at the end of the year, 260.34. That was the end of December. Look at your last 90 days. Right about there. Okay? High, low is look at the motion. Down, up, down, up. Okay, interesting. 1 day to the upside. Again, I'm going to wait because there's only 1 day to the upside. All right, last 30 days, right there. See? Up, down. Here's the bottom here. Here's your top. Here's your bottom. What happens next? Going to go up. But there's only one day to the upside. I like 2 days to the upside, and then on the third day, if everything looks good, I'll jump in. At this moment, I'm going to put it on hold. I'll take a look at it later on during the week. Maybe it might be a good trade for Friday. All right. PNC. Okay. Tengrica, I don't know if that's right, wants to look at TNC. I have no, Tenant Company. No. Wasn't that quick? That's how long it should take you to take a look at a stock. It's either going to be a yes or a no. Weekly options, yes. Monthly options, no. PNC was a monthly option. That was a no. Pretty quick. All right, it's 18. We got 12 minutes left. We're going to take a look at questions and only. All right. Kookie, can non-U.S. immigrants buy dividend stocks? Yes. You have to do it with what is called a, I forget the exact name. Resident alien account. Okay, resident alien account in order to do that if you're a non-citizen. How do I join my team, Abu? Send me a DM right here on TikTok. I'll give you a call. Okay, DM me with your number. Okay, I forgot to say this. Anybody who wants to talk to me, listen closely. There's about 30 people pretending to be me. I don't do email, I don't do text, I don't do WhatsApp, and I don't do, what's that other stupid thing? Telegram. I use the telephone the old-fashioned way. You can call me boomer, you can call me old man, you can call me whatever you want. Just do it on the phone. Pick it up, dial the number, I will call you. You want to talk to me? Leave your number. I will give you a call. I won't farm it out to someone else. I won't have someone in the office call you. There is no one in the office. It's just me. This is a hobby. This is not a business. This is just a hobby, what I do, and I'm passing this off to my children and my grandchildren. Granted, he's only 5, but 10 or 15 years, I may not be here. At least he'll have this information for him to work with. So, Abu, send me your number. As long as it is a continental U.S. number, we're good. Andrew, why do you prioritize dividend over capital appreciation? Because I'm retired. Capital appreciation means I put my money into a company and I sit there and watch it. Watching a stock move does not pay the bills. Terribly sorry. Has to be cash flow. Okay? Simple. I remember when Amazon went over 1,000. So do I. Still didn't buy it. Love the passion. Thank you, Theodore. S&P Global. Nope. Irma, what was the best day of the week to buy and how long? Oh, I don't buy options. Okay, Irma, number one, I don't buy options, and the best day for me to sell options. I'm not a buyer, I'm a seller. Remember, 80% of all options expire worthless. So why would you buy one if 80% of them expire worthless? I sell them because I love the idea that 80% of them expire worthless. Okay, do you study economics at all? Nope. And did you work as before? Okay, 3A guest or ghost. Is that guest or ghost? Okay, 3A ghost. I was a CEO of a manufacturing company. So no, I had nothing to do with personal finance other than the fact that people just give me boatloads of money and I had to figure out what to do with it. So what do you do with boatloads of money? Well, you invest it. You invest it into stuff, stupid stuff, until you keep getting it wrong. Until one day you actually get it right. And then when you get it right, you keep doing what you got right. Okay? I come from a time frame. We call us Gen Xers. We have a couple of very interesting things that we say all the time. Number one, if it ain't broke, don't fix it. If it's working fine, leave it alone. It's actually that simple. If it works, leave it alone. Okay, I'm not into shiny objects. I have no desire to look at anything new. I will not send you a text. I will not send you a WhatsApp. I will not do any of those things. I don't do cryptocurrency. I don't do futures. I don't do Forex. I don't do quick contracts, whatever they call those things. Anyway, let's keep on going. We got 8 minutes left. Let's see how many questions I can get through. Elliott Wave, yep. Do I like Chevron? Love Chevron. Which option strategy you use? Covered calls. Is a straddle better than an iron condor? It depends on what it is you're looking to get. G. Okay. Stan. No idea what that means, Stan. Ooh, G wants to take a look. J.P. Morgan. I'll have to take a look at that tomorrow. JPM. Next. 2% on which one? All right, Kelly, 2% was, I think it was Dow, wasn't it? And Hewlett Packard, and Albemarle, and Merck. This week. Flash. How do I got on board of your fund? Ooh, Flash. Send me your number. I'll give you a buzz. Brian, hedge fund. I want in. What is the investment? Brian, send me a DM and I will let you know. Nice explanation of the general strategy. I'm not comfortable with options yet. I will get there. Okay, KJL. Let me see if I can explain options to you a little bit clearer, because they're really awesome if you think about it. Let's say, KJL, let's say hypothetically you have an old car in your backyard. Let's say it's a 1982 station wagon, town and country station wagon. Let's say you put it out in the front lawn and you want $1,000. You put a sign, $1,000 best offer. Tom down the street comes by and says, hey, KJL, I like your car. Let me give you $100. Hold it for me till Friday. If I come back on Friday, I will give you the $1,000. Consider this $100 as a non-refundable hold it for me deposit. If I come back on Friday, I will give you the $1,000. So you got $1,100. Okay. Now, let's say hypothetically, I don't come back on Friday. What do you do with the $100? You put it in your pocket, and then Monday you sell it to someone else. Basically it. Okay, you own something. You're taking a non-refundable deposit to hold it at a certain time, at a certain date, for a certain price. Okay, the certain price is the strike price. The certain time, it's either 30 May, this Friday, 6 June, next Friday, 13 June, 2 Fridays away, 3 Fridays away, 4 Fridays away, whatever you and whoever else you're dealing with agrees with. Now, if you decide you want to give the guy 2 weeks to make up his mind, well, you wouldn't do this week. You would do next week. And for that amount of time, you get a bigger premium. So you're just holding it for someone to buy it from you for basically the exact same price you paid for it. All right? Okay. More Dorino. So you didn't get in with Amazon all while it was exploding. Nope. See, the funny thing about Amazon, when Amazon was going up, well, so was Netflix, so was Apple, so was Microsoft, so was Dell, so was Hewlett Packard. When Amazon started its incline, there were a whole bunch of other companies doing the exact same thing. So, no, I didn't get into Amazon. They never share their profits, so why would I want to? Koki, I'm interested in how your hedge fund works. Well, simple. A hedge fund works by you giving us money, we invest it, and we share the profit. That's how a hedge fund works. Rain 360, the metals company. I have no idea what that means. Okay, Jay Anderson. Yes, true. Good. User 96183766948037. Why couldn't your parents just name you Peter, or Teresa, or Terry, or Skip? That's a weird name. 96183776694837. I'm just going to call you Biff. Okay, plus the dividends. I smell financial freedom. Plus the dividends. Cool beans. Okay. All right, let's keep on going. Brian, good evening. Mary, who can see the itty-bitty writing? Okay, so Mora De Niro. Okay, now the itty-bitty writing. Now, when I say this screen here, the screen here, that screen there is live on YouTube. Not me standing in front of it, just the screen alone. So you can go into the other room, sit in your nice comfy couch or your recliner, throw on that big screen TV and pull it up on YouTube. And then you can see that itty bitty writing. That's why it's live streaming on YouTube Live. And when we're done here, you can go back and watch it. Let's keep on keeping on. What type of trader are you? Profitable one. That's a good question. What type of trader are you? I'm a profitable trader. Does he read here or is a recorded video? Okay, Zypher1, this is a recorded video. I'm reading your question and it's a recorded video. All right, it's larger on YouTube. Thank you, Laurie. That's what they all say. Thank you, Andrew. I need a good laugh every once in a while. Holy Sheet Man. Gotta love that name. Yeah, I do read it here. Now, I do have to apologize because I have 7 screens going at one time. Now, granted, the people over on YouTube over here, they don't talk very much. Now, the people on Instagram, barely hear from them also. Now, I got one TikTok channel here, and you guys flood me with questions. This YouTube channel over here floods me with questions. Now, the TikTok channel over there, I got booted off of because I said something inappropriate. Now, I trade stocks and I talk about stocks and options. I have no idea what and the funny thing is I have 2 live TikToks going at the exact same time. And I got booted off of one, but not off the other. It boggles my mind. Ooh, CLX. I love Clorox. And LEG, Leggett and Platt. Gotta like that one too. We're a little bit late. We got 1 minute left to go. Ooh, World You Want Living Girl. Back again. Honey, you gotta give me a call or at least drop your number so we can chat. You're here often. I'm kind of curious. You're here a lot. And I'd kind of like to know what you're doing and if there's a way I can help. So, if you want, drop your number. I will give you a buzz and see what we're doing. Just got here. Okay. CLF, Cliff. Yeah, no. Okay, take a look at the numbers on Cliff. Okay. MG, seriously, CLF, Cliff, you take the numbers. Zypher1, stepchildren on TikTok screen. I have no idea what that means. Mountain Mike, how you doing? David, how you doing? Thoughts on Bitcoin? Now, Vincent Holly, I love the idea of Bitcoin. I really do. Cryptocurrency, love the idea. And that's all it is at the moment, just an idea. Because it's not widely accepted. I can't pay my mortgage with it. I can't go get a cup of coffee with it. There's a lot of things I can't do with it. And I especially cannot get a simple, safe, predictable, consistent 1% every single week from Bitcoin. Until I can, it's a no for me. Because I can get predictable, consistent, and safe returns with what I am doing. I don't have the luxury of starting over again, and I'm not going to take that chance. So until cryptocurrency has a safe way of consistently getting cash flow, I'll do that. Maria, can you cover your strategy again? I just got here. Hey, Maria, how are you this evening? I got to take a deep breath for this one. Uh-oh. Space Cooler. MSTR, do me a favor. Okay? Before we go on, before I even look at MSTR, you go take a look at it and you let me know how many years consistently has MSTR increased their dividends to their shareholders. Okay, I'm looking for 2 decades, which is 20 years. Okay, 1, 2, 3, 4, all the way up to 20 years. So take a look at MSTR, get back with me, put the number in the chart. How many years in a row has MSTR increased their dividends? Okay. Oh, user 591781 blah blah blah. KKR no. IBM yes. EOG yes. MDT yes. Pepsi yes. ConocoPhillips yes. BSL no. CYCC no. SWZ no. CMCT no. RC no. You get a 50-50 shot there. Oh. Mr. Mbets. Covered calls or calls and puts? Covered calls. Okay, so Maria, can you please look at the dividends for Coney and Misty? No. Now, Maria, I was about to give you my idea, my strategy. You ready? Here we go. I got to take a deep breath for this one. I invest in dividend stocks, specifically stocks that have consistently increased their dividends for more than 2 decades. Now, I buy the stock just before the EX date because just before the EX date, the stock has a tendency to go up. And knowing when a stock is going to move allows me to do a simple strategy that allows me to accomplish 1% every single week. Now, 1% every single week is 50% per year. It takes me 5 to 10 minutes every day, which is less than an hour to make 1%, depending on the size of your account. It can be up to 50% per year. Now, Coney and Misty, sorry, Maria, those numbers just don't work for me. Okay? Now, when I say the numbers don't work for me, Maria, okay, how consistently profitable is Coney and Misty? Okay, do they have 20 years? That's 2 decades. 20 years of profitability. Well, I'm going to save you the effort of looking. No and no. Coney's not even 5 years old. Misty's not even 5 years old. Most companies don't make it 3 to 5 years, so it's no and no. GameStop has $2 billion cash on hand. I don't care. No dividends, no thank you. Okay, Dive Bandit, no dividends, no thank you. A lot of talk about GameStop announcing dividend in the future. Okay, yeah. Okay. So you're buying shares and then selling covered calls. Matthias, absolutely. Okay, let's keep on rolling. They said that MSTR has never increased its dividends. I'm well aware of that. That's why I wanted them to take a look at it. Because me keep going over the same questions over and over and over, it gets a little frustrating. So if you want me to take a look at a stock, great. I would prefer 2 criteria and only 2. And it's simple. 20 years of increased profitability in weekly options. That's it. 2 criteria. That's it. Okay, GH. I have no idea what that means. Which stock is he analyzing? Last stock we did was AT&T. Matthias. Have you tried 0DTE calls credit spreads? Yeah, no. Because I have to sit in front of my computer. No, thank you. Everyone could save time by looking at your shorts. Yeah, they could be. Blue Veracity, appreciate it. Alrighty, welcome. Let's go. We're almost done with these questions. What do we got? Secretariat. Dow has a handsome EX dividend date on Friday. Secretariat, how you doing? Now, you've been following for a while, and you've been relatively successful at it. Okay, Brown Family Builders, Dividend Kings, Aristocrats, Warren Buffett's list. Cool beans. What type of options do you do specifically? Covered call at the money. What's the rest? Okay. Does dividend decrease if a company loses money? Yes, it does. What appreciation is on your screen? What application is on my screen? That's not an application. That is a trading platform called Thinkorswim, and it is owned by Charles Schwab. Okay, so Dive Bandit, AMC, 22% today. GameStop will be over 45 tomorrow. Currently at 35. I'm sorry, but this is money too good not to focus on. Well, Dive Bandit, you have fun with that. Just to confirm, you're buying shares before the EX date and then selling covered calls at the money. Absolutely. That's what I'm doing. Okay, Dive Bandit is a little bit more speculative than I am. Mark, good evening. Laurie, good evening. Have you ever do 0GT? No. Matt, good evening. Ernesto, what's your process for separating narrative from numbers? All right, you're going to have to be a little bit more specific between separating narrative from numbers. Only need to be successful once, just keep repeating it. Thank you, Brooklyn. 86 is in the house. What's happening? I like your approach to the market. I learned a lot from you in a few days just on your perception. Thank you. Okay. Evening, 86. Bit Group, good evening. Thank you. Ernesto, how do you size position when conviction is high but liquidity is low? Okay, I size my position this way, Ernesto. You ready? If I have $100,000. I want to do 5 positions. 20%, 20%, 20%, 20%, 20%. That's 100% allocation of whatever I have. 20%, 20%, 20%, 20%. What's your exact strategy when implied volatility crashes after a catalyst play? Ernesto, these are great questions. I don't think about it. Explaining a implied volatility collapse to a 9-year-old. You figure that one out. When you do, let me know. Hey, now I know got here. James, good evening. Tom B. Stone, can I start with 500? Yes, you can. But Tom, what I usually tell people to do is if you're just starting in your new paper trade for a while, it's free. You're just taking a little bit of time and practicing. Once you get it, you'll know when it's time to put money into it. Okay, once you put money into it and you get good at it and you're consistently profitable, then you put more. And then you double down and then you triple down and so on and so forth. Never do anything you don't understand completely. You're just getting started. Don't put your money in. Paper trade for a while to make sure you got it right. I sell credit spreads far out of the money. This was interesting and safe. Yes, it is. What's your delta you're looking for usually? Tom Stone, paper trade, yeah. It's kind of like playing Monopoly. There's a whole bunch. You can actually go to Google, paper trading stocks, and they'll give you a whole list of companies that will allow you to give you everything you need to paper trade. You're basically doing the exact same. See, you can't tell the difference between a paper trading account, hold on, okay, real account, paper trading account, real account, okay. I still paper trade because I come up with trading strategies all the time that I want to try, and I don't want to put real money at risk, so I paper trade. Okay, I've been trading for over 20 years, and I still paper trade. Okay, Matt. Where is he reading all of these? I'm not seeing any of these messages. Matt, okay, so let me see if I can explain this to you, Matt. Okay? You're not the only person here. This is not the only channel that I am broadcasting on. So I have seven different channels. You are on channel number 3. Okay? So the channel over there, channel right there, the channel you're on right here, that channel there, that channel there, that channel over there, and then one down here. So I have questions coming in from all different directions. So it takes me a while to get to all. And I do read each and every single one. Okay, so I'm continually reading. We're not doing anything. What number you divide by? What other number do you find your percentage? Okay, so Brad Swanson, you take the profit. Let's do this real quick. Let's get out of there. Let's do this right there, that right there. Let's do this right here. Let's do this right here. Okay, Brad, you ready? Here's the trade right here. Buy 10 covered calls, AT&T, June 6, 2025. That's next Friday. The 2750 call option, blah, 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 blah. Okay? The profit, 510. That's the profit. It says right there, maximum profit, 510. Okay, you take the profit. Where's my calculator? Calculator, you take the profit, 510. Let's move this out of the way. Okay, max profit, 510. Cost of trade, including commissions and fees. Profit 510 divided by the cost of trade including commissions and fees, 26,996. Let's figure out what that is. 26,996. That comes to a grand total of 1.88%. Okay? You take the profit divided by what the investment was, that will give you your rate of return. RTX would technically be over 20 years unless you reset them with UTX merger. Okay, thank you, Matt. RTX is on the list, so RTX is a yes. Charlie, Lucy, good evening, good evening. Kim, how are you doing? Dope boy, alrighty. So, apparently, that's it. That's every single question I have in front of me. Every single question has been answered. We're going to call it a night, and you guys have a great time. We will see you again tomorrow night at 9 p.m. So you guys over here on the Zoom, you guys have a great night, and see you guys tomorrow morning. We're going to end that right there. And now the end is here, and so I face the final curtain. My friends, I'll say it clear. I'll state my case, for which I'm certain. Paper trade. If you were me, where would you start paper trading? I'm a blank canvas, 59 years old, gainfully employed. Tom, DM me your number. I'll give you a chat, walk you through a few things, and I promise you, guarantee you, I will not try to sell you anything. All right? DM me your number. I'll give you a buzz. We'll chat.